everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com, and I'm here to deep dive into the chart action, which is significant right now because it's all about yields. Yields go up, markets sell off. It's just that simple. We saw this yesterday with the 20-year Treasury bond auction that surprised the markets with how weak demand was. Now, let's be clear. There's still plenty of demand, but the U.S. government had to basically raise interest rates that they were offering on the 20-year to get people to want to buy it. And that's what freaked the market out, simply put. All right. So again, you know, if people look at the U.S. and they say, wow, this bill that's going to be tax cutting and all these other things, but it's really not going to cut a ton of spending, right? So that's number one. Then the U.S. economy slowing, then the massive debt that we have out there. All of these issues compounding is making more and more foreign investors skeptical about buying the long bond. Now, the long bond is basically the 10-year and anything beyond in terms of outdated, how long until maturity. And that, again, was the 20-year auction yesterday that was weaker on demand. Now, overnight, the markets kind of floated back up a little bit because the yields were muted. This morning, about 30 minutes ago, 45 minutes ago, we saw a spike in yields. Markets tanked, then yields started to come back in, and the markets rebounded. Let's take a look at this. Follow me over to the big board here, and let's take a look at what's going on. So this is the S&P futures, right? This is the 10-year yield. Okay, so you can see, and both of these are on the 10-minute chart. So each of these candles is 10 minutes long. Each of these candles are 10 minutes long. Here's what happened. Notice how the markets, the S&P futures began to drop. Why? Because the 10-year yield began to spike. Okay, then we saw the markets rally. Why were the markets rallying? Because the 10-year yield was beginning to come back in. So I really wanted to show today how you have this inverse relationship with the 10-year yield or yields in general and the stock market or the S&P futures, because it's pre-market right now when we're going over. So that's the simple factors here. Now, listen, were we overbought on the S&P? The answer is yes. This is the S&P chart right here. And what we can clearly see is we were up into some key resistance. And listen, it's not to say that the markets can't go higher. They might just need a breather. But again, we don't know yet. And I think it's very important. I mean, you go to anyone out there and they're going to tell you their opinion. But remember, good technical traders don't go on opinions. They go on what the chart is showing us. So again, for instance, if we over the next few days were to go like this, and maybe even the next week or two, what formation is that? It's an up move consolidation. It's a bull flag, right? So if that happens, then you have to say, okay, well, regardless of what my personal opinions are, we have to start saying there might be upside in the market. However, if we get something like this, a bigger reversal down, and then this, what type of pattern is that, folks? So remember, you go to the most recent big move. This down move, so consolidation, it's a bearish pattern. Do you guys see how, again, the market is what should tell us which direction is most likely the next move versus our personal opinions or what's being said in the mainstream media, what upgrades of the S&P are being done? That's all irrelevant. It's the chart that can guide us most accurately. And I say most accurately because I always say this to you guys, is that there's no 100%. You know, for me, I try to get to about 80%. That's my rock star level. If I can get to 80%, I am very, very happy in terms of my trading. All right, so again, let's watch and see. Yesterday was a beautiful down move here. Nice little sell-off, biggest sell-off we had, in fact, in about a month in the markets. But again, what happens today, and what are we going to all be watching today? We're going to watch the 10-year yield. I mean, that's literally what I will keep my eye on all day long. And for me, it's going to be basically if the yields go up, markets are most likely going to continue to sell. If yields come down and pull back a little bit, we know the markets likely will go back up. The only other thing to keep an eye on, we know President Trump is very cued in to what yields are doing. Remember Liberation Day and the aftermath. Yields spiked higher. Markets were dropping precipitously. And at a certain point, what did we see? We saw him blink on the European tariffs that were high in many of the other countries. He lowered everyone but China to basically 10 to 20% versus where some of them were at 50, 60, 70, 80%. And so it'll be interesting to see if yields go up further at some point. What does he do to try to bring things down? The other thing that's so important here, folks, is that many people are like, well, couldn't the Fed just lower interest rates? The answer is no, they can't. Why? So the Fed controls the very short end, the Fed funds rate, the bank lending rate. Now, when everything is normal, that generally will implicate or factor into what the 10 and the 20-year and the 30-year do. But ultimately, when things get wacky, the 10-year is ruled by the markets, the overall global picture. In other words, it doesn't matter what the Fed sets the Fed funds rate at. They could lower rates to 1%. If the rest of the world and every other investor and buyer of the U.S. debt out there says, I won't buy U.S. treasuries for anything less than 10%, you know what? They're at 10%. And that's what the market's going to pay attention to. So everyone always thinks the Fed has all this control over interest rates. They only have control over one aspect. It's just in normal markets where people aren't freaking out over things that will generally influence the other yields as well. All right, back to the computer we go. Let's take a look at some of these bigger charts here. If we looked at the S&P here, right? So now if we go to the 10-year, we can see the 10-year again initially was up higher. This is the daily chart now of the 10-year. Remember what I told you guys, right? So I've been looking at a target, and we talked about this yesterday in the game plan. The target for me on the 10-year is a move up to 4.74. Now, today we got to a high of about 4.62, so we'll have to see. But, and again, we could have a couple pullback days, but I still think we probably have a little bit further to go before you at least run into some major resistance on the 10-year. All right, so again, something to keep an eye on there. We're going to go over Bitcoin because Bitcoin's having a monstrous move from yesterday. It looks like it's headed to my key target. We'll talk about that. Before we do that, let's talk about some earnings. Snowflake gapping higher today. It's at 195 on the back of earnings. If we zoom out on this chart, we can see there's a lot of kind of a pivot highs, but price is actually slightly above that. So for me, I'm not going to step up to look for a day trade short probably until at least into this 210 area. If we were to get that high today, then I think the probability is strongly favoring a rejection or pullback off this level. And you can see again, how did I find this level? Zooming in a little bit, these highs here in this consolidation, this low here, and then this low right there. And that gives me the 210 to 211 level. Urban Outfitters, a big move up. I actually have to go like this to see this line. What's interesting here is we're trading at 70.85, just above this longer term trend line here. Take a look. High pivot to high pivot. So again, I don't really have a level above here, but I'm curious to see, considering this stock is basically at all-time highs and it's a retailer, I'm curious to see if profit taking comes in early in the day and brings it back below this upsloping trend line. Another trend line you can look at here, this pivot high connected right here, and basically these two merge right out here around the $70, $71 level, which is essentially where we are currently trading. So that's going to be a big level, but not so much on a day trade. More so, I'm just watching that on a potential swing short level. Any close, I would say at or below 70, you probably see a bigger pullback in the stock. Enphase and solar stocks. Take a look at Enphase down at $37 today after closing over $47 yesterday. That's a $10 and over 20% decline. But look at this trend line. Pivot low here. Pivot low here, we connect it, and this means right around this 37 level, there could be some technical support on Enphase. And again, I am interested in this as a day trade. I'm going to wait to see and let the dust settle on a swing trade basis. Although actually, I do like it actually as a swing trade as well. But this 37 or just below level looks very, very interesting to me as a possible long on Enphase. Now, again, going back to me here, center stage, what are we talking about here? Enphase for solar edge. These stocks are dropping precipitously because this new bill, this big, beautiful bill that, again, Trump is pushing through the House, it passed the House. It has basically the tax credits for solar and alt energy ending in 2025. And again, that's a 30% tax credit on solar purchases. So that's really harmful to a lot of these companies. And what's kind of crazy is that a lot of these companies were struggling to survive when they're matched up against China solar photovoltaic panels, et cetera, because they make them so cheap in China. So again, it's just something that's interesting to see here as we continue through. But again, Enphase does look interesting down around that 37 or just below level. All right, we got to go to Bitcoin here, guys. Flipping back to my daily chart on Bitcoin, we knew we had the bull flag. We even pushed through double top all-time high yesterday, which was just above 109. This is my big target at around 113 to 114. And again, you might say, well, how do you get that target? Well, simply put, just go back to 2017. Again, not reinventing the wheel here. Take that high It cuts right through the highs of early 2021 to the exact high of late 2021, which was that all-time high in 2021. And then it goes right to target 1, 2 of this year. And I think it was actually late December. It was December of 2024 and January of 2025. And therefore, technicals just tell me, again, I'm not reinventing the wheel here. I'm not making anything up. It's just that's where the line is. So for me as a technical trader, that's the line to beat. Now, if we get through that, a whole different ball game is underway. But what I would just show you guys here, which is pretty cool, is if we do a parallel channel, like here, you could do a basic parallel channel, and you could see that if we go down kind of in this vicinity here, and we bring this down just a little bit, you can see that we are coming up into that general parallel as well. Kind of an X marks the spot area between 113 and 114, maybe 115, somewhere in that vicinity. So it does look like it'll get to at least that level, but that'll be where the big battle between the bulls and the bears begins, in my opinion, as the chart dictates that the last times we've hit that level, basically going back to 2017, that has been the trigger for a bigger sell-off. And again, notice how if we come back to me, guys, how it's not about, again, what do I feel? What do I, what's my gut telling me? My gut is horribly wrong all the time, right? So it's more about just saying, okay, well, where's the trend line? I'm not overthinking it. If the last 5 times since 2017, we've hit that on Bitcoin and have pulled back, well, then who am I to say that this time is different? Now, if you go on social media, everyone every time says this time is different, right? But really, I've learned that thinking that this time is different is actually a detriment to my portfolio and the value of my portfolio. So instead, I stick with what has worked in the past, should work in the future until proven otherwise. And that's the way I work. All right. Let's get on to other charts here. As we flip through, we got to take a look at gold this morning. And gold today, let's go back to our daily chart. We're basically pausing on gold. It's kind of been all over the map. You guys know that we have this little downsloping trend line. So if we push up to about 33.70 to 75 on gold, there's going to be some resistance. And then basically our support line remains right down here. So we're just, again, following suit, down, up, down, up. Now, granted, we are making lower highs and lower lows short term, but longer term, we're still making higher lows and higher highs, right? So again, there's a difference between short term. Short term tells you there could be consolidation as long as we don't take out more significant low pivots. So this to me tells me that sure, it could come back in, maybe even go a little bit lower. But as long as we don't take this out, it's a strong uptrend in gold. And this would be more considered short-term consolidation or digestion before another move up. Now, silver, folks, silver again, you guys know I went long late last week. Today, it's basically pulling back just a little bit. I like that it's come down today, pierced this trend line here, but has held it and is back above. I'd like to see that hold with no close below. If it does, I would still strongly favor a move to at least 34.50 and potentially higher. And then just again, I talked about palladium earlier this week, platinum on the breakouts. Both of those are getting pullbacks. Look at where palladium is pulling back right at this pivot high, right? So the highest point basically since 2020, November, make that even, November 2024. And so therefore that is working as resistance. That's fine. The bigger breakout, the downsloping line, you might even pull back to the scene of the crime, but that's a buy for the next leg up. I still think eventually palladium's going to 1200 to 1250. Flipping over to oil here. Oil is down just a little bit. And notice again yesterday, right? So yesterday we had this big pop up on the back of worries that Israel was going to attack Iran's nuclear facilities. And look at how it just went right back down. Now, whether or not that means they're not going to attack it, I don't know. What I do know is the U.S. still produces a massive amount of oil, so we are not reliant on any foreign powers at this point. And I even heard that OPEC is still talking about another increase in production. And just going back to me, guys, so the kicker here is that simply, why is OPEC upping production even though prices of oil is basically around $60 a barrel, right? And the answer is very simple. They've realized that the U.S., if oil prices go up, the U.S. just pumps more oil. If oil prices go down, there's a certain price where U.S. producers are not profitable and they'll start turning off rigs. OPEC has a much lower cost per barrel. right? $20, $15, $10, sometimes even less than that. And so they can, if they push price down, they can then get U.S. producers offline and basically take over the market to some extent and ultimately find that equilibrium where they're selling and maxing out the money they're making, but at the cost of U.S. producers. So that's what they're doing essentially, guys, just to let you know. All right, natural gas here, guys. Let's take a look at nat gas. If we bring up the natural gas chart, after that big pop on Monday, it's just gone into consolidation mode. Honestly, no trade here. I know my resistance. I know my technical support. And that's basically where we sit for now. All right, guys. So listen, today is a day of watching the interest rates or the yields. Are we going to see further upside? Do we get to that 4.74 level that I've been talking about? Probably not today, but more than anything, if you're looking for the stock market rally to continue, you got to see rates come down. If rates come down, this market could even potentially test the all-time highs. But again, if rates continue to stay strong and economic data starts to weaken, you're going to see some interesting action with downside in the markets. Now, to be clear, regardless, whether it's a month from now, 3 months from now, I still think we're going to be in for another big, nasty sell-off in the markets. It's more about the near term and rates. What do rates do over the next few days into next week? That will determine the markets. All right, thanks so much for supporting us here at Verified Investing. I got to get to my trading room. You guys have a wonderful day. Take care.